I now hand the conference over to Mr. Deepak Jain, Chairman and Managing Director of Lumax Industries Limited. Thank you, and over to you, sir.
A very good afternoon, ladies and gentlemen. Let me at the outset wish everyone a good health and a safe well-being during this pandemic. A very warm welcome to the Q1FY22 earnings call of Lumax Industries Limited. Along with me on this call, I have Mr. Anmol Jain, Joint Managing Director, Mr. Vineet Sahni, CEO and Senior Executive Director, Mr. Naval Khanna, and from the finance team, Mr. Sanjay Mehta, Shruti Kant, and Ankit Sakral, along with Priyanka Sharma, our Head Corporate Communication, and SGA, our Investor Relation Advisors. The results and investor presentations are uploaded on the stock exchange and company website, and I hope everybody has had a chance to look at it. Before we start with the discussion on the financial performance of the company, I would like to highlight on some of the key challenges prevailing in the automotive industry currently in India. The OEM production in Q1 FY22 has declined by 36% from Q4 FY21 due to the unforeseen resurgence of COVID 2.0 in the beginning of the current financial year, resulting into regional lockdowns. The volatility in commodity prices coupled with chip shortages has also impacted OEMs to sustain their production in Q1 FY22. However, the industry has
Ladies and gentlemen, the line for the management is disconnected. Kindly stay on line till I reconnect them. Ladies and gentlemen, we have the management line reconnected to the call. Thank you, and over to you, sir.
Ladies and gentlemen, regret this brief disconnect. Let me just restart. The volatility in commodity prices coupled with chip shortages has also impacted OEMs to sustain their production in Q1 FY22. However, the industry has shown signs of recovery from July onwards. The production in the upcoming quarters highly depends on how the pandemic situation takes shape along with the vaccination drive across the country. The volatility of commodity prices, chip shortages may also impact OEM production. I would now like to give you a brief overview of our business at Lumax Industries. Our company is engaged in production and delivery of automotive lighting solutions, two-wheeler, passenger cars, farm equipment space, and commercial vehicle segment. We are the preferred suppliers to OEMs in India and continue to be the market leaders. At Lumax, we have a strong inclination and presence in the design of components, and our engagement starts from the design phase, working to offer our customers the best technology solutions. Lighting is not only a crucial aspect of safety, but also has We also have a new technology group and design studios with a team of engineers focused only on new advanced technologies and design. Lumax keeps creating new concepts and shares them with the OEMs. Construction at Sanand, Gujarat is also now at full swing after minor disruptions during the first quarter owing to the state-level lockdown restrictions. We are expecting the plant to be operational by the end of third quarter of this year. The The new electronic bowl facility is expected to commence by the end of second quarter of this year. The new product launches during the quarter, which consist of Lumax lighting, are as follows. In the passenger vehicle segment, for the XUV 700 of Mahindra & Mahindra, we do supply high mount stop lamps, roof lamps, and other smaller lamps. In the commercial vehicle segment, in E-Alpha of Mahindra & Mahindra, we are supplying headlamp and the blinker lamp. And in the two-wheeler space, for the Maestro Edge 125 Hero Motorcorp, we are supplying the front blinker lamps. We are hopeful for the upcoming quarter with expectation of revival in demand. The monsoon has also started off well across the nation and economic activities are opening up gradually. At Lumax, we have a well-defined strategy in place to drive the growth and achieve profitability. We are making decisive investments in technology leading to the path of innovation, which would differentiate us from our peers and also help in expanding customer portfolio. The company has secured new orders worth rupees 250 crores from OEMs for their upcoming models, as well as localization of lamps of existing models, out of which rupees 50 crores is replacement business and rupees 200 crores is new business, which is expected to fully realize in FY23-24. The Bangalore plant of the company has been recognized by Toyota Kirloskar Motor for achieving zero defect supplies for the year 2020. The Pantnagar plant of the company has also won the first position in the competition held by ATMA in the customer complaint category. Now, I would like to hand over the line to Mr. Sanjay Mehta, Group CFO, to update you on the financial performance of the company.
Good afternoon, everyone. Let me brief on operational and financial performance of the company during FY22 quarter 1. Operational highlights: the sales of LED lighting stands as 34% of our total revenue, and of conventional lighting stands at 66% during Q1FY22. The product mix for Q1 as a percentage of total revenue is 62% front lighting, 28% rear lighting, and 10% others. The segment mix for Q1 as a percentage of total revenue is 65% passenger vehicles, 28% two-wheelers, and 7% commercial vehicles. The consolidated financial performance for Q1. The revenue stood at rupees 314 crores for Q1 22 as against 504 crores for Q4 FY21. The revenue for Q1 21 stood at 78 crores. I am giving both the figure of the last Q4 and Q1. Excluding mold sales, the revenue for Q1 is at 301 crores against 491 crores in Q4 FY21. The revenue for FY21 Q1 stood at 74 crores. The company reported consolidated EBITDA of rupees 9 crore and loss after tax and sale of associated rupees 10 crore in Q1 FY22. The capex during the quarter was rupees 9 crore. That is all from my side. We will now open the call for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Abhishek Jain from Dolat Capital. Please go ahead.
Thanks for taking my question. From last couple of quarters, the company is facing significant pressure on the gross margin. Is it because of the hard OEMs negotiation with the auto. And can we predict that it will be difficult to pass on the entire RM inflation to OEMs?
The one reason is the electronics components, more usage of electronics components, and yes, the commodity prices has also increased. So the increase what is been in the Q1 FY22, it is expected to be recovered through the next 9 months. And basically, because of the COVID reasons, the settlement of raw material also is taking slight time.
So, iron inflation will continue to be at a higher side in second quarter as well as. So, can we expect that again there will be some pressure on this gross margin side? What we have seen in this quarter.
So we do not expect. This is Anmol Jain. We do not expect any significant change in the gross margins. The raw material consumption, if I look at the annualized raw material consumption for the last year, it was approximately.
Mr. Jain, your voice is not audible.
So,
sorry,
am I?
The line for the management just got disconnected. Kindly stay on line till I reconnect it.
The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं, उसने आपकी कॉल को होल्ड पर रखा है. कृपया लाइन पर बने रहें. The person you are speaking with has put your call on hold. Please stay on the line. आप जिस व्यक्ति से बात कर रहे हैं, उसने आपकी कॉल को होल्ड पर रखा है.
वो तो है ही ना, पिछले वाला उसमें कौन कौन बताया.
Ladies and gentlemen, we have the management line reconnected to the call. Thank you, and over to you, sir.
Yeah, good. Apologies for this inconvenience, friends. So I was talking about the gross margin, and I was referring to, if you look at the full year of 2021, our gross margin or the raw material consumption was at 63%, and for Q1FY22, it still stands at about 63.6%. If you compare it from Q4 consecutive quarters, yes, it has gone up by about 1.3%, but we are very hopeful that in the subsequent quarters, we will be able to recover whatever raw material escalations have been caused due to inflationary measures. We have contractual agreements with most of our OEMs on a back-to-back arrangement on the escalation of raw material prices. So I don't see gross margin being a challenge going forward.
Okay, sir, got it. Sir, as shortage of the semiconductor to persist in the coming quarter, as also indicated by the Maruti. So in this environment, what is your revenue growth target for FY22?
Well, I think for FY22, let's talk about the industry. Basically, growth target was somewhere between 15 to 20% during the start of the fiscal year. Then basically Corona 2.0 happened, and I think the industry per se has actually reduced the target from 15 to 20 to about 10 to 15%. Of course, it's on a much lower base if I look at from FY20. Now, our assessment is that for the full year, we should be better than basically the industry target, given the new order books also, as well as basically a better recovery from July, August. Full year, it's actually extremely difficult to predict. There are multiple volatilities because of COVID 3.0, variability, semiconductor shortages. But at least for the next 3 months, July, August, September, I think what we are looking at is a sustained production run, not basically having any major disruptions coming in. As and when I think our OEMs will share more feedback on the semiconductors, we will basically be fine and aligning our plans accordingly.
Okay, sir. So, sir, as you mentioned that you won the new business of around 200 crores. So, who are the key clients from where you got this business? Is it for the this MG Motors and Kia?
So primarily in the past car, MG Motors is one of the key customers where we have got basically new business awarded. We've also got basically businesses awarded in the two-wheeler segment, which is with TVS as well as with Royal Enfield. So these are some new customer additions which are there. Of course, I will not be able to talk about model-specific issues. But then also, of course, we are pushing from our current customers to get certain new orders on their current and new platforms.
And sir, you are also looking to enter into the HVAC panels. So just wanted to know what is the progress right now?
As I mentioned in the last time that we are basically going to be discussing with the customer in step-by-step manner. We are going to start the production in 22-23. I think the total market size of this is approximately 600 crores as a potential. And we basically are very close to getting now firm LOIs with one customer, hopefully in this quarter.
So it will start to reflect in the profit and loss account only from FY23 or the second half of FY22?
FY23, yes. 22-23 once we get the order.
Okay, sir. Sir, my last question is related with the depreciation that has gone down quarter-on-quarter basis. So what is the reason?
Capacity utilization during the Q1, definitely the depreciation calculated on fixed basis. So accordingly, it has been.
So the run rate would be around the 17 crores in the coming quarter, right, sir? 17 to 18 crores.
Yeah.
Okay, sir. Thanks, sir. That's all from my side.
Thank you. The next question is from the line of Hasmukh Gala from Finvest Advisors. Please go ahead.
The entire team of Lumax Industries. Sir, we do understand that times are very tough for the auto industry as well as for the company. I hope you are able to hear me, sir.
Yes, Hasmukh, I'm able to hear you.
Okay. Yeah. Now, what I was looking at, you did say that, you hope to beat the industry estimate target. Now, if I look at a similar position in FY21, in Q1, we reported a net loss of 31.6 crores. And in the remaining 3 quarters, we posted a PAT of 50 crores, turning the table on the positive side. Now, I think the loss that we have now reported, 10 crores, seems to be quite manageable. So what will be your view, subject to, this chip shortage, I think, has created a havoc with the auto industry and several other sectors as well. So how do you see things shaping up in FY22? And then how are you, and continue to that, and how are you planning, to spend 160 crore capex, which we had planned?
So let me first take the first question. I think clearly our revenue, you're right. I mean, so when we are actually seeing good signs of recovery in the month of July, I'm expecting personally not really any demand suppression coming forward. There would basically be production realignment based on the volatility like chip shortages, which we'll be very closely working with our OEMs. However, as I mentioned, the revenue outlook for the year, what we are at least expecting is much better, a double-digit high basically growth coming in. If basically the Corona 3.0 comes in also, we do as an industry feel that we have sufficient experience to actually manage that, and hopefully with the vaccination it would not be as severe as COVID 2.0. Second, I think if you're also looking at the profitability, if you see in this quarter itself, I mean, say we are consistently trying to focus on reducing our fixed costs and at least try and get as much recovery as possible in the next 9 months, so that at least our EBITDA margins are a healthy double digit. So that's, I think, our target internally. And at least as of now, we are not basically dissuaded by the fact that there are variabilities, but we still are planning to stick to the target. In terms of your investment of about 160 CR, I'll let Anmol basically take that.
So, Hasmukh bhai, this is Anmol Jain. So, just to supplement on what Deepak had mentioned, I think we do anticipate, and based on what we have seen in the month of July and so far in the month of August, we have come back to capacity utilizations of almost 85 to 90% across all our facilities, which is a very encouraging sign. So we do expect that for the full year, our revenue forecast should be anywhere between, considering the new order book as well, better than industry growth. We anticipate anywhere around 25 to 30% revenue growth for the full year, despite the Q1 deficit. And frankly, we do expect that we should come back as close as possible to the 2018-19 levels of profitability in terms of absolute amounts. That is at least the internal target. So
that is great.
Crossing a 3-digit PBT.
We had done 104 crore in FY19.
So that is our endeavor, that we come back to a FY19 level of PBT, and obviously our EBITDA margin should be on a double-digit basis. So that is our endeavor, and we are doing a lot internally in terms of cost cutting and rationalization of costs, with the added benefits of capacity utilizations and enhanced capacity utilizations. We should be able to offset in the subsequent quarters. Coming to your question of CAPEX, so, the majority, almost 50% of the CAPEX was related to the brownfield expansion in Gujarat facility, which is pretty much on track. There have been slight, maybe a month delay because of COVID 2.0, because of shortage of oxygen, etc. However, we do anticipate that this plant would soon, probably by the next quarter, go online, and hence the capitalization will start appearing on the books. So that would be the major chunk of it. Apart from that, the electronic facility, which is also pretty much in the last stages of commissioning, will also have certain capitalization of approximately 20 to 25 crores, which will also come into play. So we do expect that maybe there would be almost close to 80 to 90% of this 160 crore annual plan. This will actually get capitalized during the subsequent quarters in the books of accounts.
Okay. And sir, one last question from my side. We understand that Hyundai is planning to get into Gurgaon area, like they have set up a big office. So what are their plans? And how does it spell out for our SL Lumax, sir?
So SL Lumax will continue to strategically basically focus on Hyundai. I think it's too early to say about their plans in the NCR. They've already just established an office. So I think as and when they discuss and decide more about their plans, and you probably will hear to media, we will align with them. Hyundai remains for the group a very key and strategic customer, and we will continue to basically service them as a single source full capability supplier.
Okay. So are they going to set up a plant in Gurgaon, sir? Hyundai?
I would not be able to comment on it beyond what the media shows.
Okay. And just a rejoinder to this, SL Lumax also, you see similar progress as we are expecting in Lumax industry?
Sorry?
For SL Lumax also, are we expecting similar performance as we are expecting in Lumax industry in terms of the revenue growth trajectory and the margin level?
Yeah, because SL Lumax is very closely linked with one single customer, which is Hyundai and Kia. So that, I think, as based on their performance, they would be expecting that, of course.
Okay, fine. Thank you. I'll join the team.
Thank you.
Thank you. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. So firstly, on this, you said the electronic cost also increased along with the RM cost. So is that also passed through with OEMs, or we face challenges in passing that?
No, I think, see, all the inflationary costs are actually have contractual discussions with the OEMs. I think the raw material as well as more on the electronic components, there has been a much more steeper price increases as compared to a regular kind of a flow. And also because of shortages of chips, I think electronic components also have actually seen a disruption in the supply demand. So we continue to basically discuss with our OEMs beyond also contractual obligations to actually ask for price escalation.
Okay. And secondly, on this electronic facility, which you said will come on board in the next quarter mostly. So post that, when we localize some of these things, there will be also some margin expansion possibility from that side.
Yeah, sir, we have said that earlier that I think, once after insourcing, you could definitely see a margin expansion on our basically performance, and that this will continue to basically do our localization efforts on electronic components, which basically will have certain basically, you have to also understand that as much as we reduce our imports, the dollar and rupee parity also plays in because you are able to basically then have a better control on the rupee value.
Okay, I got it. So with that, how would our basically in case of LEDs, what is the import content right now? If you can just repeat those numbers and how that will change for the next 1 or 2 years?
LED will continue to basically import because there are no local sources of LEDs per se. But I think our emphasis and focus remains is that we would basically have the imported content on a PCB, which are certain electronic components and value add, that we should basically be able to do. So just to let you know and give an example, say on a headlamp, say our import content on LED is almost about 60%, and there's an opportunity of about 30% for localization. And on a tail lamp, it's about 30%, where 15% is a localization opportunity.
Okay, and I was referring to that only, the import content for LED lamp or not just LEDs. Okay.
Yeah.
And you also mentioned that among the OEMs that order that you got of 200 crores new business in PV, MG is the main, and two-wheeler, RE and TVS. Can you also share currently what would be our share of business with say Hero? Say in Hero sourcing, what would be our share and how that is increasing expectation going ahead?
On Hero you're talking about? Hero MotoCorp?
Yeah, Hero MotoCorp.
So for Hero MotoCorp, we are at around about 45% as SOB, and we continue and we think that will be sustained with this 45%.
Okay. And lastly, on some of these new electric two-wheeler companies, how are we engaging any customer that we got from that side?
We are in discussions, but we have not had any acquisitions right now.
Okay. Thanks a lot and all the best.
Thank you.
Thank you. The next question is from the line of Anish Munka from JST Investments. Please go ahead.
Yeah, thank you for the opportunity. And firstly, I want to congratulate the whole team of Lumax DKJN Group for completing 75 years of operations.
Thank you, Anish.
Yeah. So I just have a single question. So Deepak sir, like what we see from the current semiconductor issue is that the production levels are affected by 10 to 25% for different PV OEMs compared to the end consumer demand. So this has also led to the waiting times to increase to 2 to 6 months for most models. So could this be a blessing in disguise and help OEMs to pass on the increased raw material prices, which they have been struggling with for the past few quarters? Thank you.
Well, this is a more industry-related question. I think the OEMs have been struggling to not pass on. I think strategically they have decided not to pass on because wherever we've been going through a very, very volatile time, And I think, now they are basically not passing on fully. They're actually kind of calibrating the pass-ons in terms of the percentage enhancement of what it would be. So I think this will be a trend which will continue for at least, the few months till this kind of volatility subsides, hopefully in the next financial year. But I think we have to have a very fine balance between demand suppression as well as the supply chain capability. So this is I would say, the fine balancing which all OEMs are struggling with.
Thank you and all the best, sir.
Thank you.
Thank you. The next question is from the line of Kripa Shankar from Dolat Capital. Please go ahead.
Hi, thank you for taking my question. So just want to know what is the status of gross debt and net debt this quarter and expectation of repayment of debt by this year?
We have a debt of around 391 crores as on 30th of June. Out of that, the short-term working capital is 341 and the long-term is 50 crores. So working capital over the time, and because of the lesser capacity utilization, it has been increased, which we are of the opinion, and it will be stabilized in coming 9 months' time. Regarding long-term debt, we have taken for the Sanad expansion, and it will be for the long term, for more than 5 years.
Okay. And what will be the cash position?
Cash position, if I will take I am having the limit balance of almost around 75 to 100 crores.
Okay. Okay, right. Thank you.
Thank you. The next question is from the line of Amit Shah from Ace Securities. Please go ahead.
Hello. Good morning, sir. Sir, I have a couple of questions. Sir, I wanted to know, Maruti has announced reduced shifts due to chip shortage. So how much business loss are we expecting in next quarter? Do we have similar updates from any other OEMs?
Sorry to interrupt, Mr. Shah, but there's a disturbance coming from your line. Mute your line while the management answers your question.
So I think Maruti has just very recently announced about a few basically model mix which are changed, as well as certain production volume which has come down. I think it's also aligned with certain other OEMs coming in. As I mentioned, that this is a very, very ever-changing dynamic situation, because all the OEMs are trying to also plan their model mix so that depending on whatever semiconductors or ECUs available, they'll be able to make. So it's still very, very soon to say what kind of this thing. But as of now, as I said, in the full year, we don't expect that big an issue. We will continue to monitor and align ourselves with basically the OEM schedule requirements.
Oh, okay, sir. And sir, what is the plan of diversification? How long it will take to diversify our business from only lighting to other segments?
Well, I think this company, as I mentioned in my opening comments, is a fully service supplier on lighting solutions, having a 38-year relationship with Stanley Electric, who is our partner and promoter from Japan. We will continue to focus on lighting. The only diversification right now in terms of the add-on product we are doing is on basically the HVAC panel systems, which also is a product with Stanley. So this is the focus currently, and the company continues to focus on retaining its market leadership in lighting.
Okay. Thank you, sir. That is all.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Akash Mehta from Kapas Investment. Please go ahead.
Hello. Am I audible?
Yes, sir.
Yes, please. Go ahead.
Yeah. Good afternoon, sir. I had two questions. So quite a few OEMs are saying in the earnings call that they do not want to put the entire pricing pressure on the customers through price hikes, since it might result in a loss of sale. So do we have such pressure from OEMs in terms of price recovery?
Well, I think the price escalation is a very, very... See, let's understand this very clearly. I think everyone's talking about prices. From a supply chain to OEMs, the price pressures are very different, and then obviously the OEMs have to kind of calibrate depending on what and how they would like to see the supply chain pressures, the raw material inflationary pressures, as well as basically pressures on demand. So I think the OEM will take its own call if they want to pass on, how much they want to pass on. From a supply chain and from Lumax perspective, we have been consistently requesting the OEMs for obviously any inflations which are there in the system, specifically on raw material components. And we do have contractual obligations with our OEMs that basically gets us covered either usually a quarter or on a 6-month basis, moving average. But since the hikes have been also exceptional, we have also, beyond the contractual obligation, have been requesting them to kind of expedite these settlements.
Okay, makes sense. And additionally, there have been quite a few EV models announced by OEMs during this quarter. Are we in talks with any for the same?
From our current basically customer portfolio, we are probably in talks with almost all the OEMs for their EV models, as well as in some of the cases we have already secured businesses on their EVs. I think EVs will be a trend which will continue across segments, and we would be engaged with this. But I think there are also certain new age players which are dealing only in EVs, and the company is in discussion, although we have not received a firm order with them, but we are in discussions with that.
Okay. And just lastly, what is the progress in the Gujarat facility? I think I missed out on this part.
Sorry, for which facility?
The Gujarat facility.
So the Gujarat facility, we have already done basically our expansion plans, and I mean, we are expecting the plant to be operational by the end of third quarter this year.
Third quarter, okay. All right, that's it for me. Thank you.
Thank you.
Thank you. Reminder to the participants, anyone who wishes to ask a question may please press star and 1 at this time. The next question is from the line of Kunal Jain from District Capital. Please go ahead.
Hello. Thank you for opportunity. So I want to know, what would be the capacity utilization for throughout this quarter, and how are we placed for July and August month?
So the capacity utilization for this quarter is basically around about 60%. However, this was basically variable from 80% in April to almost 30% in May, and then coming back to about 70% level in June. However, I think now in July we are seeing a healthy recovery with almost 85% capacity utilization, and going forward, we expect this to sustain like we were doing in Q4 of last fiscal year.
Okay, sir. Okay, that's it. That's it from my side, sir. Thank you.
Thank you.
Thank you. We would like to remind participants that you may press star 1 to ask a question. Participants, to ask a question, you may press star and 1 now. The next question is from the line of Ashutosh Tiwari from Equirus Securities. Please go ahead.
Yeah, sir. Mr. on this HVAC thing. So when can we expect an order in this from HVAC panel?
So we would expect a business confirmation hopefully in the current quarter for the HVAC panel from the first OEM. And as mentioned before, the production and revenue of it will only come in FY23.
And generally, what is the content of these panels in a car, in a say mid-size car?
In terms of value, it would be close to approximately 2,000 rupees per vehicle, depending on the model and the features. But I'm just giving you a very ballpark estimate per vehicle content.
Okay, and like say, if you get a contract, say order, so will we be a sole supplier for that model, or is it like shared between different 2 or 3 suppliers?
Well, it really depends on the volume of the model, but as of now, the engagement which we have with one of the OEMs is as a 100% share of business for that particular model.
Okay, I got it. Thank you.
Thank you.
Thank you. Participants, to ask a question, you may press star and one now. As there are no further questions, I would now like to hand the conference over to Mr. Deepak Jain from Lumax Industries Limited for closing comments.
Well, I would just like to thank everyone for joining on today's call. Would also like to say that we remain confident on the growing prospects of India and the automobile and auto component industry. I hope we've been able to respond to your queries adequately, and for any further information, request you to kindly get in touch with SGA. Stay safe and healthy. Thank you once again.
Thank you. On behalf of Lumax Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.